Welcome to this online webinar related to product and customer profitability. My name is Armand Kajakan. I am a partner at XB4 Consulting, a management consulting company which is focusing on improving and automating the corporate performance management processes such as strategic planning, budgeting, forecasting, management reporting, BI, and statutory consolidation. Here below you can find some of our success stories. This webinar is recorded, so we'll be happy to share it with you at the end of the session. If you have any questions, please write them down in the chat and I will be happy to answer to your questions at the end of the session, where we have foreseen 15 minutes for Q&A. All right, I propose that we start the webinar. Maybe before starting, I will give you some contextual information related to the material used for this webinar. I will present you an application we have built in Board software. Board software is a decision-making platform which covers all areas of corporate performance management. Today, in this example, the application is about a company that we called X-Bike. So it's a company which is producing and selling bikes and other products related to bikes. The application covers different areas such as the management reporting, as you can see here, which covers the fully monthly closing, some reports, the long-range business planning on several years, the budgeting process on commercial part, financial P&L, balance sheet, cash flow, the same for forecasting, monthly forecast or quarterly forecast, would it be rolling or normal forecast, and also some simulation functionalities to do top-down or bottom-up simulations on different parts of the P&L, balance sheet, and cash flow. But today the topic is related to customer and product profitability, which is limiting the scope to this area of the application, the management reporting part. If you have any questions related to the other parts of the application, be aware that next week, no, not next week, the 1st of December, there is another webinar we organized on the simulations part. Feel free to subscribe to that free online webinar. If you're interested in any other parts of the application, feel free to contact us. We'll be happy to organize a demo for you. All right, let's start talking about the profitability. So in general, to understand the profitability of your company, what you need to do is to have a good insight into your figures, revenues, costs of your company, and the way they impact your result. A common way of analyzing your revenues, costs, and profitability is to, of course, prepare and then also consult some reports. But which reports and how to prepare them, this will be the main topic of this session. So we'll cover questions such as, is a basic profit and loss statement report good enough to understand the cost structure of my company and its profitability? Why is the cost structure important in the analysis of the profitability? What management accounting principles are required for this analysis, etc., etc. So to answer those kind of questions, let's start having a look to a first report, which is the variance analysis on my P&L. This is nothing really rocket science. It's just a basic profit and loss statement, which most of the organizations have. What you find back in this report is the P&L structure, so the different reporting lines of the P&L, starting with the volumes, the net sales, the gross margin, then different type of expenses, the EBITDA, up to net income. In column, we have the actuals previous year data, the actuals current year, the variance actuals versus previous year in values and in percentage, the budget, the variance versus the budget, forecast, variance versus the forecast. We see that this report here we have, so in this report we have some filters. For the moment we are looking at the year-to-date data from January to October. All business units, all legal entities, all departments, and the basis layer, which is a dimension that I will explain later during the demonstration. So we find back here also some KPIs, which are mainly the profitability ratios, so the gross margin, the EBITDA, and the net income. We see the 61 million here, which is the gross margin in actuals. We see the variance versus the budget and the variance versus the prior year. We also see the percentage of the gross margin versus the net sales this year, so 30.9% versus the net sales, and previous year it was 31.4%. The same with EBITDA and net income. So in this report, we can already see that if I focus here on my actuals, that 30% gross margin percentage, it means that with every 100 euro of sales that I am generating in my company, around 70 euros goes to my cost of goods sold and my suppliers, and the remaining is spent here on the expenses, and I get a 17.6% after covering all the costs to run my company. But actually what I see is that there is a big gap between the gross margin and the EBITDA, which is explained of course by the different expenses here. But in this report, I don't have a full view on these expenses. To have a better view on those expenses, I can go into another report that I used to call the P&L versus net sales. What is the difference compared to the previous one? I find back the same P&L lines, actual previous year, actual budget, but in this case, I find also a column which tells me the percentage versus net sales for actual previous year, actual budget, and forecast. So in this case, again, we see that we have a gross margin percentage of 30%, but we see also that around 14 euros of each 100 euro sales is going to cover the costs to run the company, which is already much more than the previous one, because I'm able now to identify the materiality of the different costs and which costs are important in my company. Why is this important? Because then if I want to increase the profitability of my company, I have two options, either increase the revenues or decrease the costs. If I want to decrease the costs, then I rather focus on I rather put my efforts on the most material expenses, which in this case are, as I can see, the advertising and marketing costs and also the gross salaries. Okay. But actually, it's good to see the different the structure of those costs in my P&L. But do I really have the possibility to impact to influence each of these costs? Actually, not really. And that's where the importance of the cost structure comes into the picture. When we talk about the cost structure, few things can be important to consider depending on the company. So the cost structure will be different if you are a product company or a service company, but the cost structure can also be driven by the value or driven by the cost. For example, if a value-driven company like Rolex, the objective is to increase the value and not really the costs of producing that product. But on the other hand, a cost-driven company like Ryanair, their focus will be on minimizing the costs of the products or service as much as possible. But in any case, the principles of the cost structure analysis will be similar. The way to analyze them will be similar. And so what do we exactly mean by cost structure? Not only we need to see the impact of each cost line on the result, but we also need to understand which cost is correlated with the sales and which cost is not. In other words, which costs are variable, so evolving with my sales, and which part is fixed. But before going into the details of the detailed cost structure analysis, there is another very important aspect to consider in this kind of analysis. It's what I call the business dimensionality. What I mean is that looking at the profitability ratios of my company on a total P&L like this, well, it gives me already some information, and it gives me the status as it is now, but it doesn't tell me how to improve it. What is the link? What are the real drivers behind those figures? On which drivers can I put my effort in order to increase the profitability? So I need more information on the business dimensions. I need to be able to identify the products which are the most profitable, or I need to understand which customers and which sales channels are the most profitable for my company, and therefore identify also the real drivers which will help me to create the link between my financial statements and the day-to-day operations of my company. So in order to do that, we need to do some allocations of the cost. And this is where we are going to see a possibility of doing cost allocation. This is typically the kind of topics and functionalities where a software like Board can help us to make it easy. So what do we have? We find back here on the right our P&L with the different lines. We find back here in the columns the layer dimension. The first one is basis. So actually this is just the information that I have loaded from my ERP system, from my source system. And what I want to do is to do some allocations in order to have my P&L up to EBITDA by product and by customer. Now, to do that kind of allocations, in general, there are two ways. The first one is, let's say, the most traditional cost allocation method, which is based on drivers such as the quantities, the sales, the gross margin, the top part of my P&L. And another way is to use more operational drivers, such as, for instance, to allocate the costs by customer. I can collect the information of number of visits per customer, etc., and start using that as allocation driver to do my allocation. Now, in this example, we kept it simple. We use the top part of the P&L, which in general is already available by product and by customer. But to make the allocation, we find back here on the left the different lines, expense lines, which are the same as my P&L. and in the column we have the different drivers. So the idea here is that I can choose for each P&L line what is the driver, quantity, gross sales, net sales, or gross margin, to do the allocation. So if I focus on this one, here I am saying to the software, please allocate my travels and transfers expenses to products using the quantities sold as allocation driver. And I can do exactly the same here for the customers. Yeah. What I find here in the bottom of the table is the actual data with the percentages. So then I can do some analysis before choosing these drivers. I can say, okay, if I want to allocate my travels and transfers expenses by quantity sold, here I have my quantities, actual quantity sold, the products by row. If I sort here on the percentage, I see that most of the travels and transfers expenses will go to this product, which has 4.68% of the total quantity sold that I can find back here. So the 27,000 of products, that's my 27,000 of products here. And the 100% is the sum of all the individual percentages of the each product. And I have the same information by customer. So I can really have a look to my allocation keys and decide which line to allocate with which driver. I can do this also by company. So if I choose, for instance, one company, I have less customers and I have less products related to that company. I can say, for instance, okay, this one, I want to allocate it by gross sales and not by quantity sold. If I drill down now my P&L by product, I see that everything is on not available, not product, yeah, all the data that I have loaded. So the objective of this screen is to allocate these to all the individual products. So to do that, I can simply run this process here. This is going to take a few seconds because it needs to recalculate all the relevant allocation keys applied to my full P&L for all legal entities and make the allocation by product and customer. And once this is done, I could then see immediately the result here in my allocation layer. Let's just wait a few seconds that it can finish. So again, the objective here is to create my full P&L up to EBITDA by product and customer. And once my data is available by product and customer, I can also start analyzing my profitability at product level or customer level or any other level which are in the same hierarchy as my product and customer, such as product categories or customer country or the sales channels of my customers, etc., etc. So you see that now the calculation is finished. In my allocation layer here, the total impact is 0. So I'm not changing the result of my P&L. The only thing that I am doing is some allocations. If I come back here on the lines and I drill down by product, I see now that what the board has done is that he has allocated these costs to the representation cost to the individual products using the drivers which I have selected here. And if I scroll to the bottom, I can clearly see here that what he has done is he has reversed the total amount on the product not available, and he has done the proper allocation on all the individual products. So in this case, for instance, if we focus on the representation costs here is based on the quantity sold. If I sort here on the percentages, I go back in my drill down. I sort here on the percentages. You can see that these are the same products using the same percentages, 16.97% on this product. And this is also the product which gets most of the representation costs. Why? Because it's based on the quantities, and probably that for this company and for this month, the quantities sold for this product were high, quite high compared to the other products. Okay, and I can do exactly the same analysis by customer. If I take another example, the gross salaries, my gross salaries are allocated based on the net sales. So if I sort here and I drill down my gross salaries, I can find back the same percentages, 25.8% on this customer, etc., etc. Okay. So now that I have my data by product, by customer, and also all the related dimensions, I can do some further analysis. To do that, I have some product and customer profitability reports. Let me start with the product profitability. What do we have here? Again, for the same month of October, for all legal entities, I find back some lines of my P&L, the key ratios, the key lines of my P&L: net sales, cost of goods sold, gross margin, the three main expense blocks, EBITDA, EBIT, and net income. But this time by product categories. So this is the total. And here I have the split by product categories: components, accessories, clothing, and bikes for actuals previous year, actuals, and the variance. So again, this report, that's what I call the €100 net sales report, which means that on every €100 that I am able to generate on this product category, 66 or 67 euros goes to my cost of goods sold, 6 euros goes to sales and marketing expenses, another 6 euros goes to personal expenses, 1.2 euros goes to general expenses, and at the end I only have 20 euros left in the company as profit. I can see the variance versus the previous year, and here I can already see interesting information. For instance, if I compare this over the product categories, I can see that for components, on the EBITDA, I have 20, on accessories, I have only 0.1, and on the other ones, it's also quite okay. Whereas here on the gross margin level, the accessories are quite high. So it means that on the accessories, I am able to generate a lot of gross margin, but then I'm spending a lot of money, in this case, on sales and marketing expenses to sell these products. Yeah. What I can do is even do a drill down here by product to identify the individual products, which are, so if I sort here, I can see that I'm spending a lot of money on these products, and I can have all the details by product like this. Yeah, I can drill down on each line, also on the EBITDA, to make my detailed analysis by product and profitability ratios. What I find back here in the bottom is a kind of waterfall which tells me the main expenses. So in total for this month, I have 2.6 million expenses, starting from the travel and transfer expenses down to the office expenses. So these 2.6 million expenses, I have 98 here on the total sales and marketing, 1.1 million, around 1.2 million on the personal expenses, and 250,000 on the general expenses. What I can do also is drill down, for instance, on this line to see the details by product category, yeah, components, accessories, clothing, bags, and I can also open to see the full detail by also product subcategories, actuals previous year, actuals, and the variance. So in this case, I am really able to make the analysis of my advertising expenses by product category, by product, and to make the comparison versus previous year to see on which products I'm spending more or less money. Yeah. What I could do, of course, is also to use the filters that I have here on the left and select, for instance, one specific sales channel and say, okay, let me see the same report, but only for the retail channel. So I see that here it's even worse. I am losing money on the product category accessories in the channel retails. Okay. I can go to another report which is focusing on the gross margin and the EBITDA. This is an interesting report where I see what we call here the well curve, which gives us the information of the accumulated gross margin here on the y-axis and the accumulated number or percentage of products in the x-axis. So in this case, I can see on each line here, on each point, the individual products and their contribution to the gross margin. On the left side, I have the products with the highest gross margin. So in this case, 327,000. And at the end of the curve here, I find the products with the less gross margin. I can have the same analysis on the accumulated EBITDA, not only gross margin, but EBITDA. I see here the distribution by channel. And I can see also the bubble chart, which represents actually the different product categories by net sales and EBITDA. So the product categories which are here on the top right part of the chart are also the most profitable product categories. Yeah. What I can do in this report is, for instance, say, okay, I want to focus my analysis on the most profitable products in terms of EBITDA. So in this case, I'm going to focus on around 20% of my products, which generate already around 75% of my EBITDA. Again, I can see each and individual product like this. I can decide to double click to drill down by customer and see for that specific product what is the EBITDA that I am generating by customer. I can see here the channel distribution for this specific, the most profitable products. Again, I can drill down here by product to see the details, net sales by product. I can go and drill down on these ones to see the distribution per channel for the product subcategory road bikes, etc., etc. So this is really allowing me to focus on the most profitable gross products or product categories based on this well curve, which gives me the percentage of accumulated gross margin or accumulated EBITDA compared to the percentage of products. Yeah. I can go further in my analysis and focus on the top 10 or bottom 10 products. What I find here is the top 10 products that I have in my company. I see the net sales, the gross margin, and the EBITDA. I find back the same information here, where I can see where does my money go from the €100 of sales that I can generate with those products. I see also the distribution by country, which are the most profitable countries. So what I can do here in this report is, for instance, say, okay, the distribution by country looks like this. What if I focus my analysis on only these top 10 products? Then I see that the distribution by country is slightly changing. Belgium was first for all products. Now I see that the most profitable country is Switzerland. What I can also do is focus on a specific product, and I can select it like this. In this case, again, I see that on the most profitable product, I'm able to generate a result of 15 euros on every 100 euros of sales. This product is sold mainly in Switzerland and UK. I can find the net sales, the gross margin, and the EBITDA. What I can also do is to analyze the customers and the different dimensions related to my customer for this specific product. So I see that, let me zoom in a bit. I see that again, I have the 80,000 euros EBITDA for this product, all customers. I see the distribution by channel. So from the 80,000 EBITDA, 54 is for retail, 17 for distributors, 8 for major accounts, and only 1 for e-commerce. I can also drill further and look into the retail channel, which are the countries, the most contributing countries, in this case Switzerland, which is in line with my chart here. And I can even drill further and identify the individual customers. In this case, it's mainly this customer which is buying most of this product. Yeah. So I'm really able to drill to the details by product and by customer on my most profitable products. Now, if I come back here, I think we have seen enough reports related to the product profitability. We can have a look to some reports related to customer profitability. I find back here the same type of report, the €100 net sales report. In this case, not by product category anymore, but by sales channel. So retail, distributors, major accounts, e-commerce. I can do the same kind of drill downs by product or by individual customer or whatever. I can see the distribution by country and even an interactive map like this, where I can see the individual cities where my customers are located, and the size of the bullets are the quantities, whereas the color is the gross margin that I'm able to generate versus the previous year. And I can even drill down on these specific customers, and I choose, for instance, to see the product or any other dimension. Here we go, all the individual products. I can also do the same kind of analysis as we did for the product, most profitable products. So in this case, I see that I'm able to generate around 80% of my gross margin with only 29% of my customers. Here is the product mix for all the customers, in product mix based on the quantity, product mix based on the net sales, and product mix based on the gross margin. So I see that I'm selling a lot, for instance, of clothes and accessories, but in terms of net sales and gross margin, those product categories are not very profitable. If I focus my analysis again on the most profitable customers, I can see that for those customers, I'm selling mainly bikes and components, which is also in line with the previous analysis. And again, I can go to the individual customers and drill down further on the gross margin or on the EBITDA to see the details of the individual customers or products. Yeah. I will come back here, and so what we have seen up to now is the profitability ratios on the P&L, how we can generate how we can understand the different expenses in the P&L towards the net sales and which expenses are the most important ones. We have been able to do the allocation by product and by customer and do the same analysis by product and customer. But is this information really good enough to understand what expenses I can change or what expenses I cannot change? Actually, not really. To have that insight, I need an extra information, which is the real cost structure behind the total cost. And this brings us back to the topic of cost structure, which I will show you here in this report. So what do we find in this report? Again, for the same period, October 20, I find back my KPIs that I had also in my P&L. So the quantities, the net sales, the gross margin, and the EBITDA for this specific product, which is in here. I see also here in the bottom the variance versus the previous year for the quantities, net sales, gross margin, and EBITDA. What I find here in the middle is the total cost per unit. Okay, so the total cost, which covers both the cost of goods sold and all the expenses of my P&L. I see that for this specific product in my actuals, it's costing me 37 euros. Last year it was costing 40.7 euros. So I've been able to improve the cost, to decrease the cost with 3.7 euros. And I can also see which part of my cost I have been able to improve. I find back here the manufacturing cost, which is mainly the cost of goods sold, and then the different expenses of my P&L, in this case split between variable and fixed costs. Why is it important to have this information of variable and fixed costs? Because obviously some of the fixed costs, they are there. Even if I produce more or less, I am not able to really influence those costs. If I really want to reduce my cost, I rather focus on the variable cost. And in this case, I see that the total difference of 3.7 euros is mainly coming from my variable costs, which have decreased compared to last year. And I can drill further to see here within the manufacturing cost, which costs are direct, which costs are indirect. And I can even drill further here to identify the individual cost components in my direct or indirect expenses, for instance, the factory overheads or the direct raw materials, etc., etc. Yeah. And again, on the variable costs, if I open those two, I can see that in my variable cost, I have some sales and marketing expenses, personal expenses. Here are some general expenses. I find back the personal expenses, but this time it's fixed, not variable, and other fixed sales and marketing expenses, which I can again drill further and really see the individual cost components, building expenses, equipment and material, fuel and oil, infrastructure, etc., etc. Yeah. So this gives me the full information on the structure of my costs by individual product. And using this kind of analysis, I am really able to identify which components of my costs have increased or decreased, and on which components I need to focus, to put my effort in order to increase the profitability of my company. Yeah. Okay, I think with all these reports, we covered the topic of company profitability and product and customer profitability. So it's also 10 minutes, 9 minutes left before the end of this webinar. So I will check if you have any questions. I don't see any questions. So once again, I will, this webinar was recorded, so we'll be sharing it with you and all the participants who couldn't join this webinar. Thank you very much. If you have any further questions or you're interested to discover other parts of the application, do not hesitate to contact us. We will be happy to organize a demo for you. Thank you very much. Bye-bye.